Welcome to this webinar where we will be talking about effective digital onboarding and why you only have 14 minutes and 20 seconds, and I'll get back to where that number comes from. Thank you everybody for joining. It's nice to see so many that's taking time to be on the webinar. This webinar is being recorded, so it's possible to watch it later. And if you do have any questions at all, please use the question function in the app. Press the button and ask the questions, and we'll get back to the questions from you later on. I'm really lucky to have with me two distinguished speakers. I have Sarah Kocianski from 11FS. She's writing reports on fintech and tech, and she's definitely an expert in the field. She's a lot of experience from fintechs, and she's a regular host at the Fintech Insider podcast, and also a regular contributor to Forbes. So welcome, Sarah. Good to have you here.
Thank you very much for having me. Great to be here.
So we'll get back to you in a couple of minutes. First, I want to introduce Reuben Sagar from Onfido. He has been there for about 4 years now and has grown the company a lot these 4 years. And you have been a really important part of building this up. So it's about building organizations to see the users' real identities. And Reuben is the regional director for the Benelux Nordics and the Eastern Europe region. So welcome, Reuben.
Thanks, John. I love the picture of me pre-coronavirus hair days. Those were the days. Yeah. Thanks for having me.
No, it changed. I actually got to see my barber, and he was mean with me because I hadn't been there for so long, but of course we weren't allowed to do that. So onboarding, what we have found is about 40% abandon digital onboarding. 40%, that's 2 out of 5 people. People that you manage to bring to your website. They're so interested, they want to sign up, so they started, I want to be a customer button, and then they abandon. How do we know this? We asked a number of people. We did interviews in a number of countries in Europe, and this resulted in the Battle to Onboard report. We released the 3rd edition of this report last June, the 2 previous reports the years before, and the numbers have been pretty consistent. It's about 40%, the abandonment rate. So it hasn't really improved over the years. We'll be soon coming out with a 4th edition, and I'm excited to see what the numbers are looking at. Are we improving? Is it getting better? Or are we still at this high drop-off rate? And the report is available if you would like to have a look at it. So why do people abandon? The 4 main reasons are that you have to provide too much information. And I think this is especially for the fintechs, which are required to collect all information from the regulatory perspective, but also others collecting all this information maybe for marketing purposes. So that's number 1, collecting too much info. It's a time it takes. It takes too long. You have to go through all these processes, answer all these questions, fill in all these fields. It takes too long, and I'm going to show you in a second slide. In some cases, you have to provide physical information. So you start the digital onboarding process, and then suddenly, okay, now you need to make a picture or photocopy of your document and send it during using post, or we're going to send you some documents that you need to sign. So you're disrupting the whole process. And also the language is confusing. It's difficult to understand what is it you're answering. Why do they have to have all this information? And if you look at just going back to the countries, I mean, we also did this in the Nordics, and in the Nordics we're using the EIDs, and it should be really simple to do the onboarding using one of these EIDs. But confusing language came very high on the list there, and I've tried a couple myself just to sign up, and it could be improved a lot to make it a lot simpler to understand. Okay, why am I providing this information? What's going to happen when I do it, etc. So how long does it take? Well, this is how large percentage of the users abandon after a given time, and the cutoff is about 14 minutes and 20 seconds. If it takes longer than that, well, on average, people are going to abandon. And I mean, 14 minutes, 20 seconds is a long time for an onboarding process. And also considering that about 29% of the applications take more than 20 minutes. Something really needs to be done here to improve these numbers, to lower the abandonment rates on this. So what are we trying to do? Identity assurance, digital onboarding. It's about establishing a reasonable assurance that the user is who they claim to be. I mean, I claim to be John Erik, and then I need to provide a service provider with a reasonable assurance that it's really me. And reasonable assurance depend on several factors: the jurisdiction, the risk. I mean, if I'm selling flowers, do you really need anything else than the shipping address and my payment details? If you're running a bank, you of course need to get a lot more, or if you're renting out yachts or something with high value, you need to get more info. It's about the resources you want to spend, and also technology could be a factor in deciding this. So this was a quick background, what we're trying to do. We're losing 40% of the users during the onboarding phase, and something needs to be done. So with that introduction, I'll be handing over to Reuben and let you go through a couple of slides here. So you just let me know when we should go forward.
Thanks, John. Yeah, so I guess wanting to kind of build on those slides and just look at some of the background to why we're thinking about identity verification in the first place. If we move through to the next slide, John. So I love this cartoon. John also loves this cartoon and remembers when it was released at 93, I think you said. And I think what it really symbolizes is the problem that we all face when looking at onboarding customers remotely. On the internet, nobody knows you're a dog. So this idea that anybody could be sitting behind the computer screen signing up for a service. And if we go to the next slide, what that means to us today and to financial institutions and to telcos and other businesses is a very real threat with regards to really scary subjects such as human trafficking, drug trafficking, and terrorist funding. And so really understanding who is sitting behind that screen is crucial. If we go through to the next slide, and just to talk very briefly in terms of sort of, I guess, the current setting, what Onfido thinks is that the problem really starts with the user profile. And so what we tend to do as businesses is we ask a customer to go through an onboarding process, and that might be in person, it might be remote. But once they have their user profile, they're kosher in our eyes. They're all good, and they can do whatever they want within our platform. And the great problem there is that if the bouncer at the front of the door hasn't done a good enough job verifying that identity, actually they could then start using those services with malicious intent. So we really think that the problem starts with the user profile. And if we flick to the next slide, the way that Onfido sees this starting to be addressed is by anchoring accounts in a real identity. So moving beyond the concept of using email verification or telephone verification, and really looking at anchoring that in something that has a real place in the real world. So looking at a government issued ID card, like a national ID card or a passport, and matching that to biometrics. And that's really how we see financial institutions in particular starting to address this real concern around who's on the other end of that computer screen. If we just go through, I think there's another slide after this one. Very briefly in terms of sort of, I guess, how Onfido helps our customers, but actually really broader than that. How does digital onboarding help businesses? Because I think that's a more interesting topic. And I think what we tend to see is that financial institutions and all of these are challenger banks will really look to do three things with digital onboarding, whether it's Onfido or another platform. They want to be able to onboard customers more quickly. Gone are the days where it takes many days to open a bank account. They want identity verification to be a enabler to onboard customers very quickly. They want to be able to onboard more users with less resource. you know, we'll talk about that, I'm sure, in this call, in terms of the challenges around coronavirus and the limitations that's putting on workforces and how businesses are trying to scale in that setting. And then in general, they want to onboard an increased number of their customers. We know, and one of the great challenges for digital onboarding is that the percentage of users that are actually fraudulent individuals trying to attack a platform or use a platform with malicious intent is very, very small. It's something like 2.5% across the board. And so being able to onboard as high a percentage of your customers as possible is crucial. And, you know, John spoke really eloquently about the challenge that businesses see today in terms of the percentage of customers that tend to drop off. So very briefly, in terms of what's the background here? So real challenges in terms of fraud that businesses are looking to address, and really historical measures not necessarily providing the tool to prevent that type of fraud. Thanks, John.
Yeah, well, thanks for the intro, and it's you know, interesting that you mentioned this, you know, human trafficking. I mean, there are some reasons we have that money laundering directive, and a lot of people tend to forget, you know, this is really important. I mean, this is not some just regulation that somebody invented, you know, just to make it difficult to be a bank customer. It's solving real problems. So, Sarah, I mean, I mentioned 40% abandoned. I mentioned 14 minutes. Would you last 14 minutes doing an onboarding? I mean, you're going to talk something about the user experience.
You know, I might last 14 minutes because I'd probably want to know what on earth they were doing wrong and report it back to my team, and then probably write, you know, a scathing article about it. No, it depends. It depends what you're being onboarded for, exactly as you say. And I think the point about user experience is that it kind of is the glue here. It's the middle bit. So all the technology that Onfido has and the wonderful things they can do are useless if you don't implement them in such a way that I, as a user, can get what I want to get done. I really don't care how you do it. I do sort of understand that you need to check who I am, but I don't really care how that's done. I want it to be quick, I want it to be easy, and I don't really want to have to think about it. So at 11FS, we do a lot of our research using a jobs to be done methodology, which I think is quite widely understood. But at its base, it's literally not what product does the user want, not what service do they want, not what do they need, but what job is it in their life that needs completing that has brought them to this situation. So if you are onboarding to a new bank account, let's use that example because I think it's one that people are pretty familiar with, then the job you want is probably not to open a new bank account. The job you want done is maybe to move your money somewhere, maybe you want to pay lower fees, maybe you want higher interest rates. So you're not going through this whole process of opening a bank account because you want a bank account. You're going through the whole process because you want something else at the end of it. So the idea of user experience, I think people can make overly complex, but it is simply, how do I get done what I want to get done as easily and quickly as possible for me? And I think that last bit is really important as well, because as you and I have talked about before, John Erik, I have this rather cliched phrase, but I say it all the time now, and it's one size fits no one. So if you're just going to design one product, one service, one user journey, one way of identifying me, that's not going to work for the majority of people, and that's perhaps why you have such high dropouts. So just a little bit of context perhaps as to why I'm talking about this, and perhaps, you know, a little bit of sort of, I suppose, credentials on my part, if you like. At 11FS, we have a platform which is called Pulse. And what Pulse is a video library of real user journeys. So we go out and we capture users actually completing tasks. You know, they can be making a payment, they can be getting a credit card, but the set of journeys we have that get the most views, and our clients are financial services companies, is onboarding. It's the thing that companies get wrong so often. It's the thing that companies know is most important, and they are desperate to see how other people are doing it, but also how users are reacting to it, because that's the joy of our videos, is that you can see where different users might be doing things differently. And that brings you back to this user experience piece, that it's not, I don't care how great your functionality is, if I can't use it, if it gives me friction, if it frustrates me, then that's no good for me, and that's where you get these high drop-off rates. So I spend an awful lot of my time watching these videos. I've seen some truly awful journeys. I've seen some excellent journeys. I have to say most of Onfido's come on the excellent side, Reuben. We do use the example of Onfido a lot for a company that works very well on both sides of this equation. But also, if anyone wants to go and have a look at 11FS Pulse, there's also a couple of reports on there. One I've written about onboarding as a whole journey, and one my colleagues have written, which is on user experience in finance, and they draw out some examples in there as well. So yes, I suppose I'm here to sort of sit in the middle between the technology and the bank, and then I'm actually going to represent the user, I suppose, today.
I think you raise an excellent point there, saying, I mean, the user doesn't really care about this stuff. I mean, I claim, I mean, I'm an identity nerd, right? For me, identity is the most important thing in the world, and we tend to focus around that and build around that. But people don't really care. As you said, they just want to get something done, some improvement on something. So I think that's a really important thing to remember in this user journey. It's just the way onto something else.
Yeah, yes. I mean, you and Reuben might think something's absolutely beautiful, and then I come along and go, well, I don't know how it works, I don't understand it, and how do I even turn it on? You know, you guys have done a great job as far as you're concerned, but the person that, the other end thinks it's a rubbish job, and I think probably your bosses who want the person at the end to actually finish the journey probably think it's a rubbish job as well. So I think there was that little disconnect sometimes.
Right.
And I think one of the, sorry, I was just going to say, one of the,
go ahead, Reuben.
John Erik, is in terms of people don't really care until it's really great or really bad, right? And so when you start to look at app reviews, you start to see really nice threads of comments coming through when user journeys are very, very good. So Revolut is obviously the example that a lot of people point to in terms of very seamless flow. And if you go through their app reviews, it's all about this amazing experience. I opened a bank account in sub 5 minutes. What a great process. But it's if you sit at either end of those poles, and it's only in comparison because traditional bank opening is so poor that it becomes this really exciting thing to be able to open a bank account. Because you're totally right, a customer shouldn't be really excited about how long it takes to open a bank account. They should be excited about the products and the features once they get there.
Yeah, I mean, it should be as exciting as opening the door to your branch and walking in, right? I mean, that's basically what you're doing. I mean, and there was, talking about the user experience in the banks, there was a report a couple of weeks back where they had the number of clicks to open the accounts, where I think, what's the background for that, Sarah? Remember?
So I don't think that was one of ours, unless I've misunderstood what somebody's published.
No, okay.
But there have been a couple of, there was one very recently that came out that was comparing lots of different of the digital banks and doing this literally counting the number of clicks you have to do, the number of screens you have to do. That is a metric that can be useful. I do think people sometimes get a little bit hung up on that, because we've compared some onboarding journeys from some of the larger UK or neobanks present in the UK. And one has more journeys, more clicks, but actually is a smoother, faster process because of the way in which it's laid out. Things like they ask for information in a different order. It's little things like that, but they get the same information, but the way in which they do it means that the customer faces less friction and gets, the problem with friction is frustration, and when you get frustrated, your willingness to wait gets even less and even less and even less. So I think the number of clicks is an interesting one, and I think certainly some of the processes that the incumbent banks do, when I'm still clicking and I'm on screen 85, I think when is this going to end? There are little things that banks do to get around that. One of the things I really like is when banks tell you up front how many numbers of steps is, or say you're on step 4 of 5 or step 5 of 6. And the other thing that we've seen is larger banks are starting to pick up on this, but the neobanks have done this very well for a long time, is tell you up front how long roughly it's going to take. So they will say up front, this process normally takes 3.5 minutes. This process normally takes 7.5 minutes. And when you do that kind of thing, the number of clicks, I think, becomes less important. So I think, again, I suppose it's that balance between the metrics that are important, but actually the overall experience as well. And I guess that pushes you into customer experience rather than user experience. Obviously, UX is a big part of CX.
Yeah, no, I mean, I see. I mean, just counting clicks could be too simplistic. It's more complex than that. So more clicks is not necessarily better. So, but I mean, do customers understand why they have to provide all the information? I mean,
not always, and that's a really, really important point. So often, if you're exactly to your example earlier, if you're buying a bunch of flowers versus you are opening a bank account, there are very different sets of information that are required. Now, most people, and I think most retailers would go, sorry, it's a really interesting trend. When you look at a lot of retailers, they went through a phase of when you wanted to purchase something, you had to create an account. And that, for merchants, saw a lot of people dropping off because they're like, I don't want an account. I've never shopped here before, or I only want to buy this once. I'm not going to give you all my information and let you store it. So we've seen retailers come back to letting people check out as a guest, or offering like a guest checkout. And I say this because to me, it goes back to that point about how much information do you want to provide. Because when you go into that kind of creating account, I've got to give you my email address, but I'm also going to give you a password, and I've got to check a box that says, I want you to call me, mail me, text me, send me a flying pigeon. I don't know, but there's a lot of information you want from me, and I just want to buy that bunch of flowers for my mum's Mother's Day. You know, and I don't understand why you need it. Like, I don't get it. You know, I just want to make a purchase from you. So that's kind of a really good example, I think, of a, you know, user experience winning out when you come back to this idea of a guest checkout. But I think also how financial services industry can learn from other industries. You know, A, learn from your mistakes and fix them, but to only ask the information is absolutely critical, and more importantly, at the correct time. So if you look at what a lot of the neobanks have done, and I'm sure Reuben can speak to this more from a process perspective than I can, but generally speaking, they will ask for the minimum required amount of information for them to be in accordance with all the laws, and to satisfy their own risk appetites. There's a couple of things here. One, those neobanks' risk appetites or their understanding of risk tends to be, let's say their risk appetite is slightly higher, although that's a very simplistic way of putting it, but they are prepared to offer you an account with less information. Now that's typically to do with the fact that their back-end systems can do a lot more, and with the help of third parties like Onfido, can process less information to give a better response, to give a more accurate risk calculation. Whereas the larger banks will, you know, before you can even open a current account, have to give them information about your mortgage and your salary and your pension and your dog's middle name. You know, it's not relevant. It might be relevant later. Now, I do understand that. Like, if later on I want a bigger credit limit, or I do want a mortgage, or I start doing bigger transfers. But ask me for that information when you need it. Don't ask me for that information at the beginning. And to your original point, make it very clear why you want what information is from me. So we need your name. Well, okay, give you that one. Email address, probably okay. Phone number, because we're going to pair your account to your phone. This is more secure than sending you two-factor authentication SMS. Okay, right, you need my phone number. You know, things like that. We need your address, because this is where we're going to send your card. I think my internet may be giving up, so I will cut that short and just say the very, very simpler point here is I need to know why you need the information, and only ask from me at the point at which you need it. Don't just take it for the sake of taking it.
Sure. Because I think that it comes. Your point is really spot on in terms of customers don't mind sharing data. They know that it's an important part of the process, and I think data privacy is something that we talk about to our customers a lot, because, you know, we're collecting sensitive data. Identity documents tend to be the most sensitive information people tend to hold, and so there is this nervousness. But actually, customers, if it makes sense, are happy to share data. If it makes sense for the product they're accessing and the level of access they're requesting, it really makes sense. And you're completely right. You see traditional banks often having this process, which is like, we want to get every bit of information so that at the end of this 20-minute process, we can sell anything to you. Often the problem with that then is that when you actually decide to buy that mortgage, they then re-ask you for the information because you come in via a different platform and go through a mortgage broker. That's another issue. But certainly that sense of, if customers are being asked for information and it makes sense for the product they're requesting, they're happy to provide it, and they're not going to drop off, and they're going to go through that process, because it's going to be the same wherever they go. But if you ask for too much information, it's a big red flag for a user.
Is there any friction in the onboarding that will actually improve the customer experience? I mean, do we want to have some friction?
I think this is a really interesting topic, this idea of friendly friction, as people call it. And I think, you know, in particular, if you think about the financial landscape of today, we've moved beyond this world of where we're all accessing financial products from the same 10 banks if we're in the UK, or 5 banks if we're in the Netherlands, and we're all getting the same products from the same businesses. Actually, you're now accessing different products from different platforms depending on where you are and what you're wanting to access. So you might be going to Raisin for your investment account and never heard of that platform before, and only just heard of it a couple of years ago. And so we're seeing with this surge of new brands into the market a real challenge for those challengers to show that they are credible institutions. And I think that's where friendly friction becomes a really important concept, by showing that you as a business are really taking due diligence seriously and want to understand whether the individual that is signing up for the platform is who they say they are. That reflects really well on you as a business as well. It says, okay, these guys are taking it seriously in terms of onboarding myself. That means they're also probably taking it seriously for all of the other bad actors out there, and probably are managing a really safe platform. And so I think friendly friction, especially for those challenger banks, can provide a real good level of cover in terms of the brand recognition that they don't otherwise have.
I think one sort of great example of friendly fiction. Friendly fiction? That's a very different topic. Friendly friction. I've seen is if you in the UK we have Monzo. It's one of the largest neobanks, and when you go through their onboarding journey, when you get to the terms and conditions, an awful lot of banks and neobanks even will just make you click a box and say, yes, I've read these. Now I'll be honest with you, I very rarely read them all, even though I know I should. But what Monzo will make you do is read through each section and click that you've read each section as you go through it. Now, it doesn't give you a full legalese T&C document. It gives you short paragraphs with emojis in that really hammer home the really important points per section. Now, you could argue that's more friction because you've got more clicks and I've got to do more steps. But in terms of the customer really understanding the product, and also I think understanding that the brand wants them to understand, then I think actually that's an improvement to that journey. That's a much better journey than if I just clicked yes on a box and then had no idea what I was getting myself into, and then later on had no recourse to act on that because I'd clicked the T's and C's without having read them. So it's not so much to do with identity, but I do think that's just a good example in this area.
I agree. I think it's really good. I mean, who wants to read 28 pages of legalese anyway, or I mean, even understand it, right? So I think sort of abstracting the way you mentioned there is a good idea to, make it more understandable for the user. What is this about? What are the terms and conditions in English or whatever language? I found a report from that said about 66% of customers. I like all the security protocols when I interact online because it makes me feel more protected. I think that's a valid point as well. I mean, it's undermines. Yeah, this is safe. It protects me. Sorry.
I was just going to say, I think it depends on the product in question, right?
Yeah, right. Yeah, and I guess also, I mean, it's a difference again from, as my example of buying flowers or taking out the mortgage, right? So I would expect, as a user, I would expect more friction if the value goes up of what I'm trying to do. One topic that's not discussed enough, I think, is accessibility. And people are different. Not everybody is, fortunate like us. And what are the challenges with people with different impairments in this area? I
mean, there are huge challenges with accessibility, full stop, across financial services. But if we want to talk, perhaps I think most obvious examples for today are kind of physical challenges that people might have. So, for example, if you are visually impaired, then there are going to be certain steps of some onboarding journeys that you can't do. So a lot of people who are visually impaired either have phones with very large screens on them, very large text on them. So there are certain steps they can go through there, or they have software that reads out text in front of them, and then they can spell, addresses and things back into them. These software packages or these aids are not necessarily applicable to every onboarding journey. There are things that organizations can do themselves to really think about this. There is an example of a bank, I can't bring to mind exactly which one it is now, but there is one of the onboarding journeys to banks, you can press it to have everything read to you rather than having to read it yourself. You do run into difficulties, of course, when an onboarding journey is entirely digital. You can't go into a bank and explain something. So if you are visually impaired, or if you are hard of hearing, that can be difficult. Also, for example, if the onboarding journey is only available on a mobile phone, you may have somebody who's visually impaired who can use a desktop, but when you get down to the small size of a mobile phone, it becomes difficult. You've got people who are physically impaired for whom taking a picture is actually very difficult. So if you've got to take a picture or a video of yourself and you say, I can't remember maybe Reuben knows what the latest one is. It used to be my voice is my password. And you have to take a little video that kind of moves you around. That can be very difficult for some people. Don't get me started on trying to hold my phone still to take a picture of my driving license so it's clear enough. And I don't have a physical impairment, but I can find that a little bit difficult. So these are things that do affect minorities, but if you don't think about them holistically and perhaps find ways around them, and more importantly, make the aid that you offer obvious and helpful to people, because you may do it. It may well be that for some of these banks, all you have to do is ring them up and they will, okay, of course we will help you do this another way, we have another option for you. But if you don't know that's there, you think, well, I can't open an account with that bank. It's really that simple. Not least of all because some of them, you could have somebody sitting beside you who does most of the work, but when it gets to taking a selfie, how do you do that with somebody else in the frame? Just little things like that kind of become more apparent as you look at them. And one of the reasons I wanted to talk about this today was we had a client who asked us to look at the onboarding journeys of 7 of the best, if you like, or best in class neobanks and account providers in the UK. And one of the categories they wanted us to look at was accessibility. We thought, no problem, they'll all have this covered because of the sort of organizations there are. And only one had one option that was obvious to us, and we spent a long time digging. It's our jobs to dig. And it was really shocking to me that we couldn't find anything or any way around it. Even going on their websites to look through FAQs and help, there was no option for what do I do if I'm in XYZ situation. So I don't know the solution, and as you say, we're very lucky, the 3 of us here, to not suffer any of those impairments or disabilities ourselves. But I think that as we race towards doing things more digitally, as we race towards doing things faster, to doing things perhaps with fewer steps or using technology like biometrics, we have to consider those who might leave behind. And I'm not saying I have the solution. I just think it's something that we can't forget needs to be thought about, if that makes sense.
I think it's also a part of where a lot of these businesses are in terms of their products and the time that they've been around. So I guess you tend to be as a business and a startup launching a product, be quite focused on a particular customer and building product around that use case, and then you start to widen it out. And I think businesses are starting to think about accessibility a little bit more, but it's certainly the case that I think across industries, if you think about Uber versus black cabs, Uber has the ability to have taxis without having accessibility for people with disabilities, whereas black cabs are forced by their regulation to have accessibility. I think that's one of the, I guess, unsaid sort of benefits of launching a challenger, whether it's in banking or another sector, is that you get to go by without complying with all of the regulations that maybe your traditional competitors do. But I think that's changing a lot, and I think a lot of the challenger banks are now of a scale where actually they have to take their responsibilities a lot more seriously. And so we're seeing a shift there on our side. We've been challenged by a lot of our customers because we're in a similar place, right, to actually start looking at improving the accessibility on our product. So we've been doing work over the last 2 years now with the Digital Accessibility Centre and the Royal National Institute of Blind People to really look at how does our product support these types of users, and how does it hinder them and their access to a product, and how can we play our bit. But it's certainly something that we see now becoming more important for challenger banks. But we've been working with traditional banks for many years, and they've always had it as a requirement because they have to. So yes, it does seem to be changing slightly, but I think you're right. We all need to kind of take a little bit more responsibility for that.
I mean, one thing that's related to this is bias. I mean, I've heard some solutions have a challenge recognizing people with darker skin, for example. And I mean, they tend to be better at recognizing white males than, for example, women and other. Any thoughts around that?
Yeah, so yeah, there's been a lot of studies that have been public with regards to, so if you think about biometrics, there are businesses like Onfido which do quite specific things in terms of comparing an individual's face against a face on an identity document, which is, I guess, a particular application of biometric checks. Then you also have businesses like Facebook and Microsoft that have their own technologies in terms of comparing faces. So just raw comparison of faces to see if they're similar or not. And there have been lots of studies with regards to the effectiveness of those solutions to establish whether an identity or a face is the same for different people of different backgrounds. And you're completely right that they tend to be very, very good at solving for their main data set, which on the whole tends to be individuals, Caucasian individuals, and in particular males. Or if you're the Chinese services providers, you're very good at the individual faces that you've processed. And there's this kind of inherent bias with solutions that is built on the data set that was used to train their algorithms. And it's certainly a problem, and it's certainly something that we've seen in the market. And one of the pieces that we've really looked to do as a player within that space is to look at how can we ensure that we are retraining data sets as and when we start to enter new markets. So Onfido has been operating in the African continent now for over a year, and clearly, when we entered that market, we didn't have algorithms that were trained with large data sets of individuals that we were then seeing subsequently. And so it would have been really poor if Onfido just continued to apply the same solution. And one of the things that we did in order to address that was a retraining of our algorithms with the new data set. Because I think it's not a bias that these solutions have because they want to be biased. It's because they've not had the data in the past. But that's something that we've certainly seen in terms of a challenge in the market, and are constantly looking at how to address.
So you meant. Go ahead, Sarah.
I just want to build on that point that I completely agree with everything you said, and as somebody who has many thoughts on why so many artificial assistants are women, we have women's names and women's voices, but then are actually quite useless at serving women. There's another thing I just wanted to add in there, which is about when you're looking at the data. I think we're getting much better at it now, but historically, companies or people who are developing these products have been bad at disaggregating that data. So they'll get a load of data that includes 50% men and 50% women, average it out, decide that that's what the risk is based on that group, without actually seeing that there are different risks for different groups. And you actually do need to sort of completely pull that data apart and look at how you might be, even though you think you're being incredibly fair and unbiased because you've got this data set that includes all these different people. If you don't then disaggregate it and look at kind of the findings from each group you want to make sure you're inclusive of, then you end up being accidentally biased yet again, if that makes sense. So I think it's that second step as well, and that's something that the people we're working with are getting much better at, but I just don't think it had been very well understood until recently. So one is there's just having bad data to start with, and then there's second, not knowing how to treat your data even when you've got it. Sorry, John Erik, I keep interrupting.
Yeah, no, go ahead. I mean, so should the regulators be more strong in this? I mean, you mentioned that the neobanks they don't have to or you mentioned taxis, right? The black cabs have much stricter requirements than, for example, Uber. Shouldn't the regulator have a stronger say in that?
I think they are. So I think I guess usually if you look at the life cycle of a fintech, they'll come into the market and they'll tend to work under an e-money license or indeed under someone else's license in order to quickly bring their product to the market. And that's something we see across Europe. Now, that provides them an opportunity to provide solutions in the market very, very quickly. It also puts limits in terms of how useful their solution can be for customers. And I think what we're starting to see now is that a lot of challenger banks, and not to focus too much on challenger banks, but it is an interesting area, are now having to start to look at converting those e-money license into full banking licenses. And with that, they'll have lots more challenges in terms of actually the regulation that they need to be compliant with, and it will become more of an even footing. And I think, that's really important, but it's also really important that businesses have the opportunity to bring their market to bring their product to market at scale, and are able to do that in a more flexible way than if they had to complete a full banking license. It would really damage the European fintech ecosystem if we encouraged all businesses to go through that process. But it's crucial that once they get to a stage that they should be regulated in the same way as a traditional bank, they are.
You mentioned that fraudsters are only about 2 to 2.5% or malicious attacks on this. So how do we balance this? We want to keep the fraudsters out, but we still want to have people with thin credit files and so on. How do we balance that to keep the fraudsters out?
Yeah, it's a really interesting challenge. This idea, I guess, of having you've got the friction of wanting to keep fraudsters out, but you also want the grease of a slick onboarding process to allow the good players to access a platform. We on Onfido's side, it's all around looking at providing user experience that enables good actors to go through the process. So accessibility is completely one of those factors, right? Like we shouldn't be creating a product that actually creates friction for users just because of their abilities. And so that's something, as we've discussed previously, we've been looking at, but also looking at how can we provide tools to check the quality of image of a document at point of capture, rather than waiting until that user has already submitted a document. So looking at improving the user experience for the good players, and again, thinking about the question of bias, that also comes into it. The big incentive for Onfido and for our customers to really address challenges around racial bias is if we don't, that means that we're going to be rejecting a large number of customers that shouldn't be rejected, because you're going to see huge numbers of false positives. So there's real incentives there in terms of improving those elements, but it's all around, in our minds, creating really good user experience for the good players, but also then looking at on an ongoing basis at what attack vectors fraudsters are using. We ran a report where we looked at data from our own systems in terms of at what times of day do we see fraudulent documents and fraudulent users being submitted to the platform. And for most of our customers, they see customers signing up at all times. If you think about opening a Monzo account, you're probably going to do that at home from bed, last thing before you go to sleep, because that's when you have a moment. But what we saw with fraudsters is that the majority of fraudulent identities come through between the hours of 9 till 5 p.m. And it's almost consistently Monday to Friday. Fraudsters are professionals who are doing this for a living, and they're consistently developing the attack vectors that they deploy in a live environment. And so while we need to think about the user experience, there's also this element of actually coming against really professional individuals and constantly developing new prevention mechanisms for those different attack vectors. I think my internet might be breaking a bit.
We have a really interesting question here from one of the audience here. It says, what if you make it so easy to onboard it that it attracts fraudsters, so you can use information to make better, quicker qualifying decisions for onboarding? I hear this like a honeypot for fraudsters. Have you seen anything like that?
So I've heard from we work with a lot of people who have worked on building challenger banks, and I don't know if the news made it internationally, but Monzo was held up in the British press for unfairly stopping a load of people's accounts, or the customers of the accounts said that their accounts have been unfairly blocked And actually what was happening was that Monzo had blocked those accounts for legitimate reasons, but in the UK you're not allowed to tell the person why you blocked their account. That's how the rules work. And what a lot of people who work in our company said, now they may say this, but they have all worked within challenger banks themselves, or a lot of them who said this had, that people think they're a soft touch. People think because it's digital, it's an easy win. So fraudsters will target them disproportionately, and that can make numbers look perhaps more skewed. So it looks like, for example, Monzo is blocking a much larger number of accounts than perhaps Santander or any other. I'm just, any bank. I'm not on that. But I have heard, certainly anecdotally, that the minute you launch a new digital-only product, and I'm not talking about the professional fraudsters, I'm not talking about the guys that Reuben knows and spends a lot of his time thinking about, probably, who spend all day every day thinking about how to get around this. I'm talking about kind of the mid-level ones, of people who think they can get away with something or trying to get around something. So certainly anecdotally, there is digital equals soft touch or easy target. And obviously we know that not to be the case, but it can skew figures and then come out in the press, and we all know what the press does.
Yeah, and I think one of the I think you're right in terms of that being the representation. I guess an interesting the other way to look at this is actually the businesses that receive the large fines from regulators with regards to money laundering are almost all large financial institutions that have been around for many hundreds of years, probably, and are well established. And so I think there is, you're completely right. So there's this idea that fintechs are soft touch, or challenges in the telco industry are soft touch, but actually, in truth, they're really concerned because because they tend to be good people that want to build platforms for their customers and don't really like things like money laundering, as we discussed. But B, the future of their business is reliant on them having proper processes. They are seeing heavy lenses of due diligence from the regulator, because they are probably applying for a full banking license. And so there really is a sense of, if we don't get this right, our long-term business future just isn't feasible. So I think, yeah, it tends to play out that they are really rigorous, but yeah, there is that vision in the market for sure.
We are in a very special situation now. I mean, with all the lockdowns, and of course, we cannot talk about digital onboarding without mentioning COVID-19 and the effects that. I mean, what are we seeing in the industry now as a result of this?
I think there's certainly been a acceleration of digital strategies from a lot of traditional institutions, whether it's in banking or telcos or any other industry, indeed, who are looking to quickly accelerate the onboarding process, the digitalization processes they already had in place, and that particularly has a focus on two elements that we see. One is around digital onboarding. So I mean, for the last 2 years, every large financial institution or other has had something around digital onboarding as part of their market announcements, and has had that as a key strategic goal. But there's an acceleration there. And then the second element that we're seeing is around the focus on manual processes throughout business. So what we tend to see is that traditional businesses have manual outsourced teams that will provide back office support for a whole host of functions. And what they're seeing now is that they are not able to deploy those back office services in the way that they previously could, because they are limited in terms of the number of individuals that they now have working in those offices due to coronavirus and remote working, or they are seeing a higher volume of incoming activity from that would previously have been swallowed up by a physical branch. And so what we're starting to see, and which is a really interesting area from Onfido, is things around, currently it takes, I think I saw some, bring up these stats, I saw some stats in terms of, so 20 to 50% of all help desk calls are for password resets, which is an astonishing number, right? For what is such a simple activity, and actually for the user, that creates huge amounts of pain. It's such a horrible process to have to phone up and wait, probably 20 minutes to speak to someone in order to reset a password. And whereas previously banks or telcos were able to swallow that up and just go, okay, we've got the people there, let's just keep sending it to them. They're now seeing a real point of friction there and are looking to really be able to automate a lot of those quite low risk scenarios. So things like password resets or PIN resets or cards needing to be sent out, or transactions being blocked because they are unusual. How can you start to use an individual's identity through platforms like Signicat or Onfido to re-verify an identity in a seamless way, creating better user experience, but also really solving a very immediate challenge for those businesses? So I think that's the really exciting area that we're seeing coming out of coronavirus.
You want to add something, Sarah? I mean, you've been doing some reports on the impact of the COVID.
Yeah, no, I think you know, to Reuben's point, the idea of kind of digital identity is an interesting one, and we've talked about this before, John Erik. But I think it's linked to the coronavirus. Is that people are, I'm hesitant to say more trusting of new technologies, but perhaps more willing to use them because they don't have another choice. So we are seeing people moving towards digital options, people perhaps who previously would have been hesitant because they didn't trust them, they didn't think they were secure. Perhaps they just thought, I know how to pick up the phone and I know my bank's phone number, so I'm not going to bother to try and download an app and work out how that all works. I know the easy way to do this. Or go into the town centre every Saturday, I'll just pop into the branch and, you know, and do it whilst I'm there, kind of thing. So I think what it's done is cause customers who had previously not engaged digitally to start engaging digitally. Now, as I said, some of that is because they've had to, and they might not really like it, but you will get, I think, quite a large percentage of people who have done it for the first time, gone, oh, well, I've done that now. And as we've all just talked about, the hard bit is setting it up. Once you've set it up, you've got it there and it's ready to use. So you will have those people go, well, it's there now. I'll just keep doing it that way. You will have some people who want to go back to the old ways of doing things. But, you know, other things like you're saying, password resetting, well, you know, now I have to do it, I have to, you know, authenticate using my voice or authenticate using my fingerprint. You know, I haven't historically wanted to do that, but I really can't wait 6 days to get my new password through the post because the posts will slow down because of COVID, or 12 days or however long it's taking anybody to get anything these days. So I think you've got, you know, I think it's causing more people to explore options they wouldn't have done previously, and I think that will work in the digital providers' favour, and hopefully it means that they can reduce the numbers of people coming through to call centres unnecessarily, or even I was talking to somebody earlier about this. In the UK, we've had a slow release of lockdown, and our bank branches have been sort of open through the lockdown. I know it's depended on the branch in question, but I walked past a bank branch earlier that had 25 people queuing outside it to go in because only 2 people were allowed in the branch at the same time. That's obviously not a sustainable system. So I do hope that more people are, perhaps it's bad to be driven to digital by frustration, but if it's good when you get there, then perhaps the outcome isn't all bad.
The disclaimer there, of course, though, is that is in the UK and we do love a good queue. Yeah.
That is true. People, they might just have been queuing because it's a really lovely day and they wanted
an
to
opportunity.
Get some
Yeah, exactly, you're pros at queuing, right? And but yeah, both of you mentioned password reset. I mean, that's a really interesting attack vector as well. I mean, it's been you know, underestimated, I guess, as an attack vector. I mean, you asked for your mother's maiden name and your place you were born and your high school friend and stuff like that. That most of that stuff is really easy to find for a fraudster, and often they will know the answers to a lot of these things better than you will. So I mean, that's also in a field where it's very important to do strong verification. I mean, you are in the situation too that how do you prove who you are when you cannot prove who you are, right? Because password is the way of proving that. So I think that's one thing that shouldn't be underestimated as well. So doing that part. And I see, I mean, as you said, a lot of people are moving into this, and it's sort of a leap of faith in a way. I mean, it's for many people new technology, and you need to try it out. And when you sort of do that, and you see it works, and then, as you said, Sarah, I think a lot of them won't be going back because they say, "Wow, this is really convenient, and it works, and I trust it." We have a few minutes left here. If we're going to bring up the crystal ball, what are we going to see in the future?
I ask this all the time. People look at me like I've just looked at you as if I'm the most evil person on the planet.
Sorry.
I think from digital onboarding, I think it's in a pretty good place, but I think what we need to see is it become more tailored. And I think we will see better processes that are better at spotting mistakes early on. And you know, maybe we can shorten that time, the average wait time. But I think it's kind of, I hate to use the word personalization because everybody uses that word about everything to do with digital. Apparently personalization is the future of everything. But I really think it is about that. And I really think it is about spotting common pain points that you may not think are common because you've got this huge set of data, but if you actually pin it right down, it's like this one group of people that always happens to. So spot them early on and help them. So I think it will be that kind of when you're looking at digital onboarding, it's practically the norm anyway for an awful lot of things. The big banks are coming to it. You know, in the Netherlands, I think every large bank you can do mobile app onboarding now. You know, in the UK we are quite a long way behind on that, but we will get there. So I don't think it's about saying, oh, digital onboarding is the future. I think it's about better digital onboarding, and I think better means getting down to that, what's good for me, and making it easy for me, and thinking about all the little different factors that go into that. And Reuben, you're going to do that for us, right? So.
Yeah, exactly. Yeah. No, I think the reason why people hate that question is because they feel like they've got to say something incredibly profound, but then we're talking about digital onboarding. So, I agree with that synopsis in terms of actually digital onboarding is here. That's a given. We're a little bit further behind in the UK. We work a lot in Eastern European markets like Poland, Romania. They're a little bit further behind, but everyone's doing it. Everyone's starting to adopt these technologies. From our perspective, I think that idea of looking at the full end-to-end user journey is sort of what's next. And I think what Sarah said was really interesting about the 11FS tool is that currently traditional banks are really focused on onboarding, right? Because that's the bit that they see as being really disruptive. So they sort of seen these challenger banks come online, and they've seen the app reviews, and they've gone, okay, we really need to fix this bit. What they're now starting to do is go, okay, well, let's look at the whole end-to-end journey. And so that I think will be the next stage. And the challenger banks are already further ahead on that piece. You know, we work with Bank in the Netherlands, and they're doing stuff around re-authentication using biometrics for password resets and tools like that. And they've been doing it for months. And now traditional banks are starting to take that step, I think.
I mean, we're back to the core challenge, the cartoon you showed with nobody knows you're a dog, right? I mean, I guess the core problem is that internet was built without building an identity layer, right? There's no way of doing that. Coming from the Nordics, where we are using EIDs a lot for a lot of different purposes. I'm sort of hoping that this will spread further. We see that coming to the Benelux area, starting to use it more. We see Germany is rising as well. Because it shouldn't be necessary for me every time I onboard to do it again and again. I should, in the future, be able to do this once. Then I have my digital identity, and I should be able to reuse that for all the different purposes. But I think for many countries, this is still pretty far in the future.
And I think there will be a shift more to this idea of portable identity. I think potentially the difference that I suspect we might start seeing in the UK, the US, and from the Nordic approach is a move away from having that as a centralized identity scheme. I think the US and the UK are quite fearful of centralized identity schemes because of the Equifax hacks and the challenges that have been seen there. So I think we will, you're completely right, start to see this move away from having to resubmit my documents for every single time, but potentially looking at portable identity as a more localized scheme where you own that identity and you can then share those credentials.
Right. And but I completely agree with you. We need a more decentralized model for handling this, but we're still going to need some identification, I mean, we need to bootstrap the identity. So we need somewhere to know, the first time you come in. And also the password reset we mentioned. I mean, you're going to lose your credentials. We need ways. So I mean, we're still going to need Onfido for a long time, I think, to do that sort of thing, to re-establish the identity back to the point how to prove who you are when you cannot prove who you are.
Agree. We need Onfido for a long more time.
I think you'll be around for a long time. Yes. We are out of time. Any final words from you, Sarah?
No, other than I also hope Onfido is around for a very long time. No, I completely agree with the points about decentralized decentralization. No, not just generally decentralized identity. I think that's the only way that you're going to get a lot of people on board with the idea of it. And it is that I think the important thing here that we've kind of all talked about, but I just haven't said overtly, is ownership. And I think perhaps that's part of the reason why people don't want to give you too much information, why people don't want to necessarily go through a longer process, because this is mine and I own it, and I'm scared about giving it away. And that goes as far as my information, because I think we've all been quite programmed to be very protective of our data and our information. And I think if people feel like that they can own their identity and it is mine, I mean, that's what we want to get really deep. We all own our identity. Like, we all decide who we are and what we project the world. And I think that extends to this layer as well. So it is about, it's mine, it's who I am, you can't have it, and I don't want you to abuse it. So as long as we can convince people that it is theirs and they do have control over it, then we win, and that's the future. And onboarding becomes a lot easier.
Thank you. Reuben, any final words?
I don't think so. I think that sounds. I like the idea of Onfido living very long. My 6-month-old daughter really likes Onfido being here for the long term. That's certainly the truth. And I think in terms of this idea and this concept of we own our identities, and that's something that I think is really, really important, and that's why people don't want to be verified against a credit bureau's database. They want to prove their identity with the data that they have, and I think that's definitely the future that we see on Onfido.
I'm sure we could have continued this for another hour or two to discuss the topics, really interesting topics. We did get some even more questions from the audience as well. We'll try to see if we can answer them. We're going to send a follow-up email to everybody, so you'll get access to this recording later, and we'll look into the questions and see if we can answer those as well in that follow-up. Thank you so much, Sarah and Reuben, for joining. This has been a interesting discussion, and of course, being an identity nerd, close to my heart of topic to discuss. So it's been really great having you here. Thank you, everybody, for listening in. And just go to our websites, look for future events. We're going to have more events, both via Onfido and 11FS. So stay tuned, and thank you.
Thank you.